can spread their risk with people who would want to take on that risk. The risk of running a business is what I'm talking about. Um, and yeah, so against that risk, against that, so end of the day, people can be a part of their business journey and subscribe to the shares, and people get, and the corporates or the promoters can raise money to carry out their business operations, which again goes back to the economy of the country, right? So yeah, so one extremely critical aspect of stock market is to help promoters raise money for the operations of the company. Apart from that, of course, stock market also is plays an extremely crucial role in terms of wealth creation for investors. You may have heard of stories like how a certain person would have invested in a like an Infosys IPO or Wipro IPO. There are tons of such stories, especially if you come from place like Bangalore, because every other guy back in the 90s who had a reasonable exposure to the stock market had subscribed to these IPOs, and they've all reaped benefits of that. So stock market is a place where wealth can be created in the longer run, right? So that's another use of stock market. Another use could be use case is people can hedge their investments. So let's say a real estate guy who has who's sitting on a portfolio of real estate assets can not hedge. I meant to say diversify. So can diversify his assets, can diversify his portfolio by having an equity exposure, right? So diversification is also an important aspect. Then hedging, of course, especially in the context of a commodities market, companies like BPCL and HPCL, right, or Reliance per se, or ONGC, right? So these guys can hedge their oil positions, crude oil positions in a commodities market, right? So there are different purposes. These are some of the main critical purposes for which stock markets are extremely important. Any suggestions on trading and profit strategies? Okay, so that's a little tricky question. Okay. So and see, when you talk about trading, I'm assuming you're interested in uh, you know quick buy and sell kind of activity. Uh, Considering the fact that most of you here are students, I would not suggest you get into trading at all at this point, because trading is a full-time activity. Trading requires your complete attention span, and it requires you to be glued into whatever is happening in the markets, both during market hours and off market hours. So that, needless to say, takes away a lot of your time. So may not be worth the effort at this point, at this stage in your lives. Uh, what I would suggest is, that's actually a part of the second, the last question, what is the safe investment option for students? What I would suggest is have an exposure to equity markets through mutual funds. Or maybe you can try and create a little portfolio of stocks, um, uh, and you try and develop a habit of long-term investment, right? So mutual funds, in fact, I would even suggest you look at a simple direct index fund to begin with, low cost index funds. These are great funds. An index fund just mimics what is supposed to mimic whatever happens in the index. And in the longer term, you'll find great benefits of index investing. There's plenty of literature out there. I would suggest you Google for it and try and understand what indexed investing is. But yeah, so if I were to summarize this for you, forget about trading. This is not the right time for trading, because trading is risky. Uh, and it requires a lot of time and attention and resources, which some of you may or may not have at this point. Uh, but yeah, I would strongly suggest you start, investing in an index fund, build a portfolio. That's one part of investing activity. The other part, I would suggest you pick, let's say 10 or 12 top companies in India, and start experiencing the act of building an equity portfolio. What you shouldn't be looking at day-to-day profit or losses in that portfolio. What you should be looking at is your own behavior, or as to how you react to price changes on a daily basis. And the behavior that is really expected is the fact that you don't react, because this is supposed to be a long-term portfolio, and you shouldn't be really concerned about day-to-day fluctuations in the portfolio. So this is the kind of behavior you should aspire to build, right? So that's what I would suggest for students at this point. Can we move to the next set of slides?
Yeah, let's move on to the next thing.
Yeah. Okay, so questions on analysis and terminologies here. What are technical and fundamental analysis, derivatives, stock analysis? Okay, so I'll break this question into smaller bits. A stock analysis per se can be carried out using either technical or fundamental analysis. We'll forget about derivatives for now. We'll come back to that later. So if you want to analyze stocks, you either do it, technically using charts, or you can look at, the company's P&L and balance sheet and cash flow and whatnot, and still analyze the stock. Then there is a third method called the quantitative method. Probably I'll talk about it a little later. So whenever this question comes up, what is the what is technical, what is fundamental analysis, I usually have a quick story for this. Uh, just imagine that you are traveling and you go to a completely unknown city, right? You don't know the local language, you don't know you don't know the locality, you don't know, everything is new to you. So day one, you're very excited. You take your camera, go around this city, click pictures, and you do the typical touristy thing. End of the day, you get back to your hotel room. The hotel guy says, "Look, there is a nice Indian restaurant. Maybe you want to go out and have your dinner." Uh, but being a tourist, you don't want to go back to an Indian restaurant, so you say you'd want to try out a local cuisine. This hotel guy tells you, if the place wherever you're staying, Airbnb maybe. So he tells you, why don't you go around the block? There is a street food joint, plenty of kiosks, so you can pick and choose whatever you want. So you're all excited. You go to that, you hop around and you go to the street food joint. You spot multiple kiosks selling different food items. Now remember, you don't know the language, so you can't ask anyone what they're cooking and what is the dish. Given the situation, how will you identify um, which particular kiosk to go and what particular food to eat? Right? Now, typically, there are two ways to solve this problem. One, you can do the traditional, go to each and every food stall, see what's being cooked, figure out what ingredients they are. If they are all local ingredients, you're not familiar with them, do a quick search on your phone and figure out what exactly it is. Get more ideas online, and then you do your research, and then kind of develop a sense of whether you may or may not like that particular dish. The other way to do this is to simply stand in a corner and observe where the maximum crowd goes. And if the maximum crowd is going to, let's say, kiosk number 15, then probably that's the most popular food joint. And if you go there, you will get the best dish out of the whole lot, right? So there are two different ways to solve the same problem. First approach, where you research and where you figure out what to eat is a very typical fundamental analysis approach to stock markets, right? So this is where in fundamental analysis, you identify a company, dig into the annual report, dig into the financial statements, dig into the cash flow and the balance sheet and other statements, and try and develop a sense of whether you like or don't like the business you're looking at. The second approach is you just look at you just look at the charts and develop a sense of whether the price you're looking at is something that you want to invest or not, right? So there are two different approaches, and both of them lead you to the same outcome. So this is the difference between technical and fundamental analysis. Then there is a third as just give me a second, please. I need to. So then there is the third approach, which is the quantitative analysis. So in quantitative analysis, what you do is you pull out the numbers, you look at the standard deviation, you look at the averages, you look at all sorts of quantitative and statistical variables, and then try and see if you can analyze the stock, right? A typical example is to look at the averages, moving averages, and then plot let's say a standard deviation envelope around it. So, and come out with a statement saying, okay, the stock has moved 2 standard deviations away from the mean. So it is likely to revert back to the mean. Hence, I would be a buyer of the stock or a seller in the stock, right? So that also leads you to buy, not to buy kind of decision on the stock. So, yeah, so these are all different ways to analyze stocks. Uh, derivatives, okay, so there is a mention of derivatives here. Derivatives is a little more complex compared to the regular, stock investments. Derivatives is where you kind of, it's a play on the underlying, which, for example, if there is an Infosys stock, then there is a Infosys futures on it, or an Infosys options, right? So these are contracts which are traded on the exchanges, and you can transact in these. It's more of a trading you know instrument available to you. I would suggest you as students only figure the the functioning of these, and but stay away from derivatives as such, because derivatives are leveraged instruments and can be extremely harmful if you don't know what you're dealing with. Harmful in the sense of capital erosion and permanent loss of capital. That's what I mean.
Karthik is facing some technical difficulties. We'll just give him a minute to come back in. Guys, while we wait for Karthik, I think I've seen a number of people posting on the chat and the Q&A. Pratik, I think why don't we move to that slide so you can just tell them how they can start posting their Q&A. We'll still ask you all to hold off till we finish theme 4, because I think a lot of your questions which you're asking are already getting covered by Karthik. But in case you have any questions you want to post, so if you're using, say, your laptop to connect, you will find that there is a black circle at the bottom of your screen with three dots. If you click on that, there is a Q&A section. So when you click on that Q&A section, it opens up a chat interface where you can post your questions. Pratik, can you go on to the next slide, which shows the chat interface? Yeah, so you'll find the Q&A section appears at your bottom. just choose all panelists so that it comes to all of us, just to make sure we don't miss any of your questions. And then you can type in your question to get Karthik to hear. Of course, time permitting, we'll see which questions we can cover, but we'll try and cover as many questions as possible. If you are accessing this from your phone, then there is a similar black circle at the bottom with three dots, which you can click on and then choose the Q&A option. That will then lead you to the relevant screens where you can post your questions. So I think a couple of you guys have already started using the Q&A, which is good. But my suggestion is hold off for a bit. Let's cover sections. There are about 5 areas which Karthik is going to cover. Towards the end, you guys can start posting, and then Karthik can cover it from there. Yeah. Perfect. Pratik, go back to the other sections. I think Karthik is back. Karthik, are you back with us? Sorry, folks, just give us a second. I think there's some technical difficulty being faced. We'll just wait for Karthik to join back in. Apologies for the minor delay, folks. Karthik is just going to dial back in. He was facing some connectivity issues. I think all of us are empathetic, given all of us are working from home with local bandwidth. For anybody who's just joined us in the middle of the session, thank you for joining in, and welcome to the Uday Knowledge Sessions. Today's session is being driven by Zerodha, and we have Karthik Rangappa who is driving. The way we are running the session is the number of you who had sent in your questions at the time of registration. So we've grouped those questions into 5 different themes, and Karthik is currently on theme 2, stock analysis and terminology. However, if you guys have any other questions you want to ask, please feel free to do that. We were just talking through how you can use the Q&A feature in the WebEx panel. What I would suggest is hold off till towards the last few sections in case Karthik already covers your question, then you guys can send in your question. Just give him another minute to join. So while we wait for Karthik, we also wanted to highlight that we've got a couple of other Uday sessions lined up in the future. But towards at the end of the session, we'll also share an email address with you all. Where this format is evolving, and we're really open to any suggestions you may have on themes you want to look at, or formats or ways in which you can do this interaction. So happy to hear from you. I think we got Karthik back. Karthik, sorry, I think you were facing some technical difficulties. Are you able to hear us? Karthik, I think you're on mute. We can't hear you.
I can, I can see the screen. It's just that I
Perfect.
got disconnected. Challenges of working from home. So please bear with me. Apologies for that.
All good. Good to have you back. Over to you again. You were talking about the stock analysis piece.
Correct. Yeah. So intraday trading is was the part where I spoke about the commodity market. Was I live when that discussion happened? Hello. Hello. Am I audible, Avni?
Yes, Karthik, we can hear you. We can hear you.
Yeah. Yeah. So okay. So the next part is about the penny stocks. Penny stocks is basically stocks which have low share price value per se, usually less than 10 rupees. Now, the fact that these stock prices are so low is also one of the reasons could be that there is no real business happening in the company, and therefore the stock price has collapsed quite a bit. Usually, penny stocks also have a market cap of you know less than let's say 100 or 50 crores. It's best to avoid trading in penny stocks because um, you know because these are easily subjected to manipulation. Uh, Unfortunately, over the recent couple of months, there has been a lot of scams in penny stocks. Operators use penny stocks to, you know, uh, derive, take over your accounts and place orders in penny stocks and ensure and basically kind of, dry up your accounts. We've been talking to the regulators about this particular thing and ensuring that such operations are curbed. But yeah, so penny stocks is just that. These are companies with dubious business nature, business models, and usually have a very low market cap. Right. So then the other term is hedging. Hedging is all about making sure you mitigate the risk. Um, so basically, one quick example of hedging is it's to buy and sell the same commodity in two different markets for two different at two different prices. This whole wave of you know okay, so let me give you an example. Let's say I am long um, on let's say Infosys, right? I have a long position, which means to say I've bought Infosys, and I'm worried where Infosys stock price will collapse and I lose my investment. Under such a circumstance, what I can do is I can hedge my position by assuming a short position. In a short position, I sell the asset first and buy it back at a much later point. Right? So I can hedge the position. And so on one hand, I'm long on Infosys in the spot market. The other hand, I'm short on Infosys in the derivatives market, right? So irrespective of which way Infosys moves, I'm completely insulated to the price movement. So my position is completely hedged, right? I know it may sound a little confusing at this point because it also involves shorting. Shorting is not a very intuitive concept, especially to someone who's starting off, to understand stock markets. So, probably I can share a few links where we've discussed hedging in great detail. What are some of the basic concepts of commodity markets, options trading? Okay, so there are two different things. Commodity markets is a different thing, and options trading is a different thing. Commodity markets is where you trade uh, commodities as an asset, such as crude oil or natural gas, or these are all energy commodities. Then you have agri commodities such as tur dal and pepper and cotton and kapas and things like that. Then you have metals such as gold and silver and aluminum and zinc. So you have different categories of commodities, and and the price of these commodities is market driven. This and the price is what you trade, in the commodities market. Crude oil has been, in the limelight over the last couple of weeks because of the fact that the prices of crude oil actually went negative. That has never happened in the history of, capital markets. I have not experienced it. People trading for many decades have not experienced it. So on 20th April, actually, the price of crude oil actually went below the zero mark and traded negative. It was one of the most historic moments, I suppose, in the commodities market. Now, the reasons for which the price went negative is technical. It's related to excess supply, shortage of storage spaces, the fact that commodity it was the expiry day, and many other factors led to that. But yeah, commodity markets is, in a nutshell, a place where you can trade these tangible assets that you use on a daily basis, right? Um, Options trading, options trading is a part of the derivatives market. Derivatives market in the Indian context has two instruments. One is the futures, the other one is the options, right? So options is a completely different animal altogether. It's not a linear product. When I say not a linear product, see, usually the stock prices go either up or down, and your payoff is either you make a profit or you make a loss to the extent of the move that happens, right? But in options, it's not the case. You have a non-linear payoff. You so it's structured in such a way that if it goes up if it moves in your direction, the profits are the profits roll in that particular direction. But if it goes against you, then there are techniques using which you can cap your losses, right? So that's the advantage of options market. Because of this non-linear payoff structure, it's extremely popular in amongst traders. In India, you may be surprised to know that 80% of trading happens in uh, 80% of the trading happens in option markets. It's not the futures or the uh, you know or the spot market, but it's actually the commodities market which is extremely active, right? So, needless to say, I can't explain all the functioning of these, instruments in the short duration, but I can lead you to sources from where you can learn about options trading. So, what is short selling? Short selling is the act of selling okay, think about a typical transaction. Okay, so in a typical transaction, you buy a stock first at a certain price and then sell the same stock at a higher price. So let's say you buy something at 100 rupees and you sell it at 120, so you make 20 rupees as profit, right? So this is a very straightforward and intuitive you know concept. But in short selling, you do the same thing but in the reverse order. You sell the asset first and then buy it back later. So you sell it at 120 and buy it back at 100 at a later point. So again, you made the same, 20 rupee profit here. It's just that the sequence of events is reversed. You can short stocks in the market, but you'll have to do that using futures and options, right? So, and it's a very complex. I mean, it's not complex. It's a little not so intuitive concept. But once you start shorting stocks and start experiencing it, you will know you'll know how to do this with some amount of ease. Okay, so can we move to the next set? Yeah. Your
I think
question.
before you move into this, there was an interesting question. I saw also a lot of questions that have been asked have already been answered by you, but there was one by somebody called Sanuj. His question is, why are the number of people who directly invest in India much lower compared to other countries? So he's of course quoted 2% of the population in India versus the others, where it's more than 50%.
Yeah.
But any thoughts on that?
Sure. I think that's a very valid question, and it's true. The number of people investing in India is extremely low compared to Western world. I mean, there is no straightforward answer to this, unfortunately. It's because of a combination of reasons. One reason is probably even today in India you still get 4 to 5% return on your money kept idle in the bank, right? I think there are a few banks which offer more than 6% now, right? These are extremely high rates when you compare to Western world. I think in US you get zero, in Japan it's negative, right? So as long as, and I think if you look at fixed income returns, they're slightly more higher than hovering around 7 to 7.5% as of now. So there's still a good return if without assuming any risk, and people are happy with that, right? So unless and until these rates are in the higher zone, people would not want to take uh, assume any risk and move to higher yielding assets. That is one, probably could be one reason. The other reason is in India, I think whenever investments, people have always looked at real estate as a investment, avenue. They've not looked at any other asset apart from real estate and gold. That perception is changing as of now, but it will take some time. The third reason could be the sheer lack of awareness. Initiatives like this and many other initiatives hopefully will address that last bit. So yeah, so it's probably because of all these reasons why the participation is so low.
Thanks, Karthik.
Yeah. So okay. So the third set of questions are okay. These are all about Zerodha. What is Zerodha's strength? Okay. So so our strength is the fact that we are still a small company. Decisions are taken very quickly. We don't have a board to answer as such. We've not raised external capital, so we don't have a board of investors or nobody external to the company to whom we have to answer to before implementing whatever we've decided. So we are extremely small, we are nimble, we are agile, and the good part is we as a team, we are always interacting with clients, right from me to the CEO, Mr. Nitin Kamath. We all spend close to about 2 to 3 hours listening to customers online, right? So we are always glued in. We are always listening to what is it that they're asking from us, right? So and we are building those products. We have a very strong tech team, and so yeah, so we and we are always trying to build features and products that our customers genuinely would want to use. So I think that is one of our greatest strengths. We also love to spread awareness. We've taken up a lot of initiative to spread financial literacy in the country, including initiatives such as this one. We partner with organizations to help spread awareness. So yeah. So education and technology, and the fact that we are small, the fact that we've not raised external capital, and the fact that we can react to situations quickly. These are all what differentiates us from the competitors. What is discount broking and how is it helping develop the market? Discount broking is essentially we started out as a discount broker. Zerodha started out as a discount broker. In fact, we pioneered the concept of discount broking in India. Discount broking is, in a nutshell, is offering deep discount on your transactional on your transactions. To put this in perspective, let's say you were to buy 50 lakh worth of shares and sell 50 lakh worth of on an intraday basis, right? So that means to say 50 plus 50, you've transacted for a crore. In a traditional broker, you would pay close to about 6.5 to 7,000 rupees as your transaction fee. So when we started Zerodha, we came out with a pricing model saying that irrespective of how much you transact for, you pay us only 20 bucks, right? 10 years on, we still charge only 20 bucks, right? So we offer great, deep discount on your transaction. Textbook definition of a discount broker is someone who allows you to at deeply discounted price and offers you nothing else apart from deep discounts, right? So there is no research, there is no relationship manager, there are no frills of a traditional broking house. We started as a discount broker, but as we progressed along these years, we do everything and more than a typical discount broker, typical stockbroker itself. So I don't think so we can be bracketed as a discount broker any longer because we've moved beyond that stage now. Right? And how is it helping to develop the markets? A discount broker tends to attract a lot more participants. This again goes back to the earlier question Sanuj had asked. Because of these, the products and the cost of investing, we tend to attract a lot more people, to the markets, and that kind of more participation implies more liquidity in the system. So obviously, that's more liquidity means more, much vibrant markets. So that's how we help the markets. Does Zerodha provide classes, e-learn for stock markets? No, we don't provide a structured classroom program. But what we have is, some of you may be aware, we have something called as Zerodha Varsity, which is available both on the web and as an app available on both Android and iOS. Varsity helps you understand stock markets in a very structured way. So we've taken up every possible topic related to stock markets, broken that down into different modules. Each module consists of several chapters, so it's like a textbook. So, and these are all not your typical academic content. This content is developed out of trading experience, investing experience, and that's what differentiates content on our platform versus a typical textbook. So it's easily relatable. So yeah, so we have that in place. So just look up for Zerodha Varsity, and you will you'll find all the content, and it's free for all. Right?
Thanks,
So,
Karthik. Karthik, I think I just noticed it's 4:50. If everybody's okay, we'll probably overshoot. We originally said 5, but let's if it's okay, everybody will look at say 5+5 or 7+5 to close. Karthik, if I'm looking at the next two themes, we have impact of COVID on the stock markets, and we also have a couple of questions around looking at careers in the stock market space and in the fintech space specifically. So you can continue to look at these, but I thought also in the meantime, opening it up to the group as well. If anybody wants to ask questions, I think some people have already started posting their Q&A. So if you do, I can then start in between. I'll keep coming in, Karthik, and asking you some questions. But you can continue in the meantime on this slide.
Okay, so in the current market situations, how can one predict stock market movements using technical analysis? Okay, so this is perhaps one of the drawbacks of technical analysis. What's happening in the market right now is very different. It's a structural change. Um, we've not experienced this in the past, so we are dealing with an unknown here. It's kind of a very fundamental impact on the stock markets. So the point that I'm trying to make is whenever such markets is under the influence of such events and such forces, things like technical analysis does not work. It's a futile attempt to look at charts and patterns and try and draw conclusions on what is likely to happen. It doesn't work. Um, so technical analysis works extremely well when things are normal in the market, right? So in the absence of an election, in the absence of corporate results, in the absence of COVID-19, or in the absence of a geopolitical tension, things are otherwise normal. Technical analysis works best. But in situations such as this, I would strongly recommend you look away from technical analysis and try and draw your conclusions based on broader, broader theme. Is this the right time to invest in mutual fund and other equity assets? My answer to this will be extremely biased because I'm a 100% equity guy. So if you ask me 10 years down the lane, if this is the right time, I would still say yes. I would still say yes now, because of the fact that when you invest in stock markets, you should have a really long-term perspective. Um, if you have a short-term perspective, then no, you shouldn't be investing. But if you're investing for the next decade or so, go ahead and do it. And yeah, pick any large cap direct mutual fund and start investing. What is the
Again, a related question. Okay, so Gaurang has asked that he's interested in investing in crude oil, given the price. And I think you had alluded to that earlier.
Okay.
Is there a way in which somebody can invest in crude oil for the long term to see some benefits? Is there some mechanism that way?
See, unfortunately, you can't invest in crude oil in sitting out of India because we don't have those instruments, right? So the only way you can do that is by taking on a futures positions on MCX, but that becomes a trading position, right? So then you'll have to deal with mark-to-market losses, you'll have to deal with margins and whatnot. But in the US, there are ETFs based on crude oil, which you can invest in. So, but of course, that's not available here. So there's no way you can get an exposure to crude oil in the longer term. But if you have access to US markets, to relatives or someone, then yeah, definitely look at the ETFs of crude oil, and worth you know investing a small part of your portfolio there. Is this the last question? Or what are your expectations amidst coronavirus lockdown? Okay, I think the expectations are, as I said, we are dealing with an unknown here, so we really don't know what to expect, unfortunately. I don't think so. The analyst community or even the corporates are very glued in on its complete impact on the markets. I think if I were to make some sense of all this, I don't think so. We will see any sort of earning uptick over the next maybe a year and a half. We will easily take about at least 2 years for some sort of vibrancy back in corporate earnings. So in the absence of good corporate earnings, I don't think so. The stock markets will have anything great to offer. But that having said that, some this fact has been priced in by the markets, so may not. But yeah, so that's about it. So it's very hard to answer that question. So I'll leave it at that.
There's another interesting one. What are the types of frauds everyone should be aware of in the stock market? I think it's quite relevant.
Yeah. Okay. So I'll tell you what is the hot fraud as of now. The latest one is a phishing scam. That's very uh, actively taking place in the stock market. So what happens is these fraudsters kind of send across links to you, web links, either through social media or WhatsApp or SMS, bulk SMS providers, right? So they spam you with these links saying that your account can be compromised. Please visit this link to ensure your credentials are okay. And the moment you click on that, it will take you to a portal which mimics your stockbroker's portal, right? So, and then you enter your password, you enter your login credentials. The moment you do that, that's captured on the fraudster's system. Now he has complete access to your system, your trading account. He'll go into the trading account, login as you. He will place an order to buy a certain penny stock which is otherwise illiquid. So if you have, let's say, 1 lakh in your account, he'll place an order to buy 1 lakh worth of that penny stock. At the other end, from his own broking terminal, he will have a counter order. So basically, he gets an exit for his for the stock that he holds. Right, that is one way. The other way is to buy deep out of the money options. Uh, so he will place an order to buy a deep out of the money option in your account. On his side, he will match that order and sell that to you. So money from your account moves in as premium to his account. This is an options trade. These two things are happening very actively in the stock market. We've alerted the regulators, we've alerted the exchanges as well. Apart from this, there are the other typical frauds is your pump and dump scheme. So, operators buy the stock and then start spreading, rumors about all the good things that are likely to happen in the stock. So, they prompt you to buy so that you don't miss out on the rally. So when people start to buy, these guys just dump their stocks and profit out of it. So that's an old scam that still runs. Apart from these two are the latest scams that are happening. Right? Okay. So
Thanks, Karthik.
sure.
Before we move into the career, I thought this is an important section to go through unencumbered. So there are a couple of questions more. I thought we could cover those and then go into the careers and capital markets.
Sure.
So a couple of people have asked about investing in foreign companies. For example, Siddhant has asked how to invest in foreign companies. I think Gaurang asked how can one trade in the US markets. So that's one question.
Yeah.
Another one is, I guess in some way related, why is it that our Indian market seems to be dependent on foreign outcomes? Like the person has asked that a decline in Dow leads to a decline in Nifty too. So why is that happening?
No.
And maybe the last question before we move on to this is somebody's also asked, is there a difference between the forex market and the stock market? Are they the same, or can you talk about the difference?
So I'll first address the investing in the US markets, right? Um, so you can invest in the US markets, keeping the RBI's liberal remittance scheme in perspective. So under LRS scheme, you can invest up to 250,000 US dollars on a yearly basis, right? So you can't exceed that. Now, so that takes care of the regulation. The way to invest is check with your broker if he offers a method to for you to allow investing in the uh, US markets, right? So we as a company, Zerodha, we are also working on bringing out a product where which you can actually access the US markets. That's a project, that's an ongoing project, and hopefully sometime this year we will have it live. But apart from us, I think there are a couple of other reputed brokers who already have this in place. I think HDFC Securities has. So so it's as good as buying the stocks in Indian markets. You log into the portal, select which stock you want, and click the buy button, and That's about it. Right? So that's how you can invest. But if you don't want to do that, then you can always buy a fund which invests in the US market. I think very recently Motilal Oswal launched a fund which invests in the S&P 500. So which means to say you buy that fund, then automatically you get exposure to the top 500 companies in the US. So that's another approach. Right? So sorry, Abdish, what was the second question? Why is the Dow and Indian markets move in the same way?
Exactly. Yeah. Why are they connected?
Okay, so it's not just the Dow and the Indian markets. I think across the world, all markets are now interconnected. None of the markets operate in a silos, right? That's because it's the same emotions that flow throughout the capital. So, and none of the economies are isolated. We are all interconnected economies. We are all interconnected markets. So, if something bad is happening or something good is happening in a Western market, that has its impact in Indian markets as well. And that's the reason why all these markets tend to move in similar direction. Having said that, local events have a far greater impact on the indices, and that's what matters in the longer term. But yeah, the reason why they move is because we are all interconnected economies, and the markets are interconnected. I think the third question was about whether the forex market is the same as stock markets. No, forex market is where you transact in currencies. USD versus INR, or GBP versus Swiss franc, or any other cross currency pair. So forex market is purely a currency market. Stock market is where you trade the shares of the company. So there are two different markets, just like the way commodity market is different from the stock markets. Right?
Thanks, Karthik. I think it's important, given the time, let's cover these three questions, and in the meantime, I'll check if there's anything else I want to cover, because I thought it's important to talk about what to look for in building a career in capital markets.
Absolutely, yeah. So what role does Zerodha usually look for, and what skill sets? Okay, so Zerodha as a company is segregated into three, four divisions. One is, the sales team, which is 50% of Zerodha. So it's a typical sales, expectation there. So you need to have sales skills there. One thing about Zerodha across all verticals, we don't really focus on the academic background. So what we really look for is the kind of skills that you bring in. So we don't chase students from IIM or IITs or the top institute. I mean, if they happen to join us and if they have the right skills, that's an added secondary that's good to have. But otherwise, it's not really a thing that we look for. So sales, we look at how sharp the guy is and how well he can handle sales calls. Then we have support support functions where we support customers with their day-to-day transactions in the market, and with any of the products. If they have any issue, then the support team comes in and helps the customers. Now, again, what is required here is a passion to learn and understand the stock markets and the capital markets per se. The same goes to the process team. The process team works in basically with to run all the processes and the systems required to keep which help in the day-to-day trading activity. Then we have a technology team where all the good tech is built for Zerodha. And so again, the hiring philosophy is very, very different there. We don't look at where you worked previously. What we look at is what have you built as an individual, what have you built, what have you broken, what have you rebuilt, and stuff like that. So that's what matters in when joining a tech team. So these are the different verticals, and this is what we really look for. Any books you recommend we consider for introduction to stock markets? I would suggest you look at all the modules we've got on Zerodha. Look at all the content Uday has on the platform. We are lucky enough to provide some content here. So please go through this. Apart from this, I would suggest you pick up, the classic books of stock markets, like The Intelligent Investor, One Up on the Wall Street by Peter Lynch, uh, Candlestick Patterns by Steve Neeson. So these are some of the really good books available, which is extremely important in laying down a foundation for capital markets. How does one make a career in equity valuation? Um, Equity valuation is a very interesting field. If you're really, really interested in making a career here, I would suggest you get yourself a CFA degree. A CFA degree is globally, valid and recognized. With a CFA degree, I would suggest you look for opportunities in the mutual fund space. See if you can. CFA will open up doors in asset management and the mutual fund industry. I think starting there is a very, very good starting point for your career. Once you've gained sufficient experience, then you can probably move away from a mutual fund and look at joining a boutique investment firm or a family firm where you are more in charge of the decisions, and spend a couple of years there. And if entrepreneurship is something that you're interested in, then probably after 10 or 12 years of experience, you can even look at starting your own PMS, right? Where equity valuation will be a very, very critical aspect.
Thanks, Karthik. I think that was really helpful. Just picking up one last question. I know it's already 10 past 5. Sorry, folks, for overshooting. I thought it's good to go through this. I think you also covered it as part of your previous answers, but just to reiterate, and a lot of folks who are on the call today are fresh graduates.
Okay.
So what are the real skill sets that you need to say pursue? Of course, the person who's asked has talked about be good at investment banking, but I'm going to broaden it a bit and talk about just in capital markets in general. What are the kind of skill sets that companies really look for from a say a functional understanding and any technical skills that people need to pick up? Any thoughts on that?
Yeah. See, it depends on which part of the organization you're targeting, because the requirement for sales is very different compared to research, compared to technology, right? So, so based on the exact vertical you want to target, I think a practical, real world experience would definitely matter. But for fresher, uh, I think the best thing a fresher can do is try and see if he can intern with one of these firms, which will give him an exposure to what really is happening in the particular firm, and he could develop on that. So I think internship would be a key.
So what about like we have a lot of engineers who have joined Uday, and a lot of them come with coding background, a lot of technical skills. Is that helpful in pursuing
Absolutely.
such careers?
I think that's more and more relevant going forward, because you may be surprised, Avnish, there are about 30, 40 people in about 30 people in our tech team, and none of them really come from the finance background. They are all hardcore engineers, hardcore hackers and developers. So what really matters is uh, if you're passionate about this, then try and build your own projects, right? So that's like build your own portfolio of projects to showcase your potential company. So I think this is what people are looking for. Your um, the academic background, of course, matters a lot, but if you can also showcase your own project work, your own, the way you built small little things that that can be showcased. I think that would matter a great deal. Right? So that's in fact one of the critical evaluation metric at Zerodha. So we look at what you've done, what you've built. You know, it could be a small blogging project, or it could be a small email system, or bulk email system, or something like that, right? So, but the point is, you need to have those projects to showcase.
Fantastic. No, thank you so much, Karthik. I think this has been really helpful. And I'm sorry, I know we could love to just keep going, but in the interest of time, I think we'll possibly call it a halt today.
Yeah. Sure.
Thank you so much for joining. I think it was really informative, and I'm sure the students on the call really got a lot out of the session.
Thank you so much. It's been a pleasure.
Yep. Everybody, that brings us to the end of the first knowledge session. So thank you for attending. We've got a few other lined up, so look out for the space, and we'll be in touch. Like I said earlier, given that this is our first round, we'd love to hear from you. This is the format that we're evolving. We already got some really good feedback from Karthik, and we changed this completely into such an interactive session as we have today. So any other suggestions like that are always welcome. There's an email showing on the screen, support@fintecheducation.com. So please send in your thoughts, any suggestions on format in terms of interest areas, and we'll try and see whether we can incorporate that in future sessions. But that's about it for today. Thank you so much. Stay safe and have a good evening.
Thanks, Avnish. Have a good day, and to all of you all. Thank you.
Bye-bye.